pay hikes rate. Today on the show, the federal government's efforts and interventions aimed at addressing the fallout of fuel subsidy removal and the unification of the foreign exchange rate amidst other economic reforms. Yes, that will be on the flip side. We'll start with the oil and gas industry. You will recall that President Bola Tinubu, fine for us to start with understanding the entire impact of this directive. You know, after the back and forth between Dangote, the NMDPRA, and of course the NNPC, different statements coming from different quarters. Then finally, after FEC meeting on Monday, the president came up with this directive. Some marketers are even projecting that this can lead to market price crash. But first, what do you make of this? Is it a win for Dangote?
All right, thank you very much, Tolu. Well, generally speaking, I think one of the positives that if at all it was a problem in the first place for the Dangote refineries, that the only plus I see, or one of the few positives I see, is that perhaps if they had issues with access to foreign exchange to pay for the crude oil cargoes, then this may help. However, other than that, I don't think the refinery ever complained about access to forex as a major challenge on their end. As regards to their consumption or demand, what NNPC is set to supply is about 4 out of 15 cargoes, which probably about 26% of their annual supply, meaning that they have 3/4 of their supply to still source from elsewhere. So I don't know the extent of the impact that the supply from NNPC would have on their overall production output. Regarding the sale of crude in Naira, the Dangote refinery, well, I would say it might be on the part of the refinery, yes, because they probably will use less dollars to get, if that. But the question is at what exchange rate, because that doesn't shield the entire process from the exchange rate regime, right? The exchange rate that's going to be used, there's still an exchange rate because production of crude oil is done in dollars, it's still denominated in dollars. And so it's only the question of Naira comes in when they want to supply the refinery. So definitely there will be a conversion. As what rate would that conversion take place? Yeah, so that means the prices may not necessarily drop because the prevailing market rate or a certain market rate that may not be too far from the prevailing market rate might apply to whatever transaction that will happen. It's just that, as usual with oil and gas contracts, there will be a 6 months period where they will freeze the rates at which they will use for sales and for conversion, and then that would apply, meaning a little bit of stability in terms of their transactions. But rather than that, on the overall price, so far, based on the information available to me, I still can't see if there will be any major difference between what we will be buying now. Perhaps the queues will go, availability might improve, and I say this because the NNPC supply cannot account for all of the refineries need. It's just supplying a part of it. So it might help a bit, but the impact from my end, I don't know how. I don't see so much of a difference in terms of pricing, and perhaps for availability maybe a bit, but that's it.
I'm looking at that write-up and I see that this could also help. That interests me so very much in the issue of fluctuation in the foreign exchange market. If we are selling now in Naira, in the international market, it's sold in dollars. But can this help strengthen our currency? That will really interest me to know.
So that is quite tricky. That is quite tricky. Like I said, there is still the production is done in dollars.
Yeah, exactly.
Just for the purpose of supplying to the refinery, there's an exchange to Naira. But the thing is that the value of that exchange might still take place at the prevailing rate of the value of the exchange rate to the dollar at that rate. So how that will strengthen the Naira, I'm still trying to figure that out. Perhaps, using dollars from the refinery to buy to buy the Naira, and then, but he has to sell to the Nigerian market in Naira. And that may also be an issue for the refiner, because the entire supply from the NNPC won't be able to provide the total supply the domestic market would need. Let's be fair about that. NNPC may only supply 25% or 26% of what they need. They need more than that to supply the Nigeria's domestic market in the first place. So if you're going to tell him to sell to the local domestic market in Naira, they're probably going to be giving him problems. The refinery may have into some challenges. So that is still something that has to be sorted out, because a precondition that will supply you crude oil in Naira, you also have to supply the Nigerian market in Naira. Now, to what degree, to what extent will that happen when the entire supply from the NNPC cannot account for every need of the entire feedstock that the refinery will need? And let us also have at the back of my mind that we don't know how much crude oil the NNPC may have left. Because I say this because we have oil-backed loans. We have the two famous deals. We know Project Eagle, which has which has 15,000 barrels per day. We have Project Gazelle, about 19,000 barrels per day. That is over 100,000 barrels per day. NNPC's share of Nigeria's crude oil is not the 1.7 million barrels per day you see in the budget. That is total production from every player, from IOCs, local indigenous companies, and the NNPC. NNPC share is probably around, let's say, 30% or so. Now, if you take our latest data that says we produce 1.2 million barrels per day in May, 30% of that is around, let's say, 360,000 barrels per day. Now, if you subtract our crude oil obligation, oil-backed loans of over 100,000 barrels, you are looking at about 260 to 50,000 barrels per day left for NNPC. These are the ones we know. We don't know what other oil-backed loans. The government is also trying to broker a deal for another 35,000 barrels per day. So we are looking at perhaps 220,000 barrels per day that the NNPC would have to broker for domestic crude oil obligations and DSDPs and the rest. Now, they also have DSDPs contracts in place. That's how would they address those ones and then bring in Dangote refinery, or are they going to just jettison those plans as well? So the amount of crude oil available for the NNPC to supply the refinery is also a question that we need to answer.
That takes me to my next question. Mr. Paulo, allow me to pop in now and ask you my next question. Increasing production seems to be key here, and that's how we can meet up, ramp up production, get more foreign exchange in. The NNPC says 2 million barrels is possible before the end of the year. How feasible is this, considering where we find ourselves as a country with regards to oil theft and what is happening in the Niger Delta region? Some cases.
I think that's easier said than done. How much has gone into resolving oil theft? So the issue with our production level, there is a multifaceted problem. There's the issue of oil theft. There's the issue of investments. We don't have any new investments in our upstream to produce more crude oil. Our rig count is about 33 or 34, which is quite low. So we don't have as much investments in that sector. Attracting investors is key to that, but so far, if we add that to crude oil theft and then infrastructure issues, before the end of the year, I don't know. And that is even if we are going to ignore. We have OPEC obligations to also meet up. Our OPEC price caps are, I think, sometime early this year was around 1.6, probably dropped to about 1.5 million barrels per day, if I'm correct. So there we have OPEC obligations OPEC costs that we cannot go above. So 2 million barrels, unless you are going to be adding the other components like condensates or the rest. But when you talk about the real crude oil, we have a limitation in terms of OPEC price caps that we cannot go above. All right. So 2 million barrels per day before the end of this year, that's a long shot. I'm not saying that it's impossible, given the right conditions, the right political will, the right efforts, and it's a lot of ifs, very big ifs. We have to do with security issues, theft, political issues, international issues, and these are very big issues that we need to resolve. But I don't see that happening before the end of this year. And I'm not trying to be pessimistic. The government has promised us several benchmarks for several years. By now, if we're going by the ERGP, we would have been exporting petroleum. But that has not yet happened. If we are looking at recent, in fact, recently was that when the Dangote refinery was commissioned in May last year. The whole buzz was that by July and August last year, we'll start having the oil from refinery, petroleum from refinery in our markets. And I looked at it and I said, no, we are looking at not earlier than 2024. But we are still here. This is third quarter right now, and we are still trying to get his products into the Nigerian market. So I don't see that happening before the end of 2024.
Now, Mr. Opaluwa, we experience in Nigeria's oil and gas industry. Let's take our time to look at some enablers instituted by this administration. We've seen executive orders focus on gas exploration. We are yet to take advantage of our gas reserves. You know that. So let's look at some of these enablers. How well do you expect this to drive the expected investment moving forward?
Okay, so regarding the president's executive orders on gas, I think that is a good development, creating the right framework and environment for investments in gas production to take off. That is good, but there are other issues that we need to consider, right? There is the issue of investments, the money to put into that sector, all right? That money will be provided by the private sector, which has to be, for lack of better word, has to be wooed to come and invest in our country. That investment right now isn't feasible. And then we are looking at an increasing international community that is increasingly, what is the right word now? Increasingly averse to fossil fuel exploration. So how many international oil companies are going to invest in our domestic gas markets, given the context of decarbonization? Okay, so what the president did is good, but I think we need to put more effort to ensure that the right investments come in. It's a difficult task to woo investors into our country right now. Apart from the fiscal issues, the security issues, we have, like I mentioned, fiscal issues that need to be addressed. We need to resolve those issues first. Let's resolve those issues first of all, and then, and quickly, because we don't have the time, we don't have the luxury of time. Resolve those issues, and then we can now see the investor that will find our markets appealing. All right. The government should be very, very straightforward with the policies they throw out and the decisions they make. All right. We cannot have perhaps an analogy that may not be related to oil and gas sector, but a major project like the highway between Lagos and Calabar that was redirected to follow a certain route and then redirected back again and then affected a lot of investments along the line. So these things are not really encouraging for people who are observing this kind of policy shifts, government decisions, and want to come and put their money. Come on, you put your money in Lagos or you put your money in Nigeria, and at the blink of an eye, you wake up money and you're under threat of losing your investment. So we need to give investors that trust they need, and that will come with a lot of transparency and forthrightness from the government. Even if you have the best executive orders from the government and you don't put that environment in place, it will be difficult to woo investors given the context that we are in respect to energy transition.
All right, hold your thoughts, Mr. Opaluwa. We are getting live pictures now from Ebonyi State where the youth and stakeholders interactive meeting is about to start. There will be an interactive session between the youth, stakeholders, and of course, government. Minister of Works there, David Umai. So we'll continue with Business Nigeria and all other platforms as we continue our discussion with Mr. Opaluwa. All right, Mr. Opaluwa, before I let you go, what will now be your entire outlook considering all that we've identified? What's the outlook for the industry?
I think we have very, very tricky times ahead. And first of all, we need a lot of transparency from the government. All right, Nigeria's bill for PMS, if I were to use PMS as an example, we spend an average of $1 billion every month to import PMS. That alone is a reason for us to push domestic refining. But however, we have other fiscal issues that we need to address to make sure that this goes on smoothly. All right, so we spend $1 billion for refining PMS alone. That needs to be addressed in terms of what needs to be done. All right, and then we need forthrightness from the government in terms of transparency and accountability. What is going on with our downstream sector, right? What is happening with why do we have queues? What are the challenges that the NNPC is facing that is making them difficult to provide seamless supply of petrol to the Nigerian economy? We need to also unbond with that, right? There are too many questions that are arising every day that just makes someone who might be interested in investing in that sector to discourage. When subsidy was removed, it was hailed by several stakeholders that it will open up the downstream sector for investors to put in their money, and so far no one has come, to my knowledge. So we need more transparency, more forthrightness from the government. Obviously, the environment is not conducive enough for businesses to come in. That is a given. A lot of the issues that have happened over the last couple of months, current situation, even within and outside the oil and gas sector. So we need we are in very tricky times. Unfortunately, we couldn't dodge something like this, but perhaps we could have gone through it better if the government had handled its policies in a better way. If they didn't rush in doing some things and decided to go gradually, especially with subsidy removal and the forex liberalization, then perhaps things may have been different. But we are here right now, and we don't have any interest than to deal with the situation. So I feel it's quite tricky for the domestic oil and gas market right now in terms of the environment. And hopefully, if we can address that, then maybe things can.
Mr.
I'm sorry, I don't have a lot of good news that you might have expected, but that is the way I see things for now.
Indeed, Mr. Enebe Okpalua, he's acting head, natural resource and climate governance at Bodit Foundation. Thank you so much for your time on the program. We appreciate it.
Thank you very much for having me. It was a pleasure.
All right, there. Welcome.